Hi there traders, this is Chris from Elite Currency. It's time for a new update on the euro dollar and pound dollar. So this is the euro dollar daily chart, and we see that price is struggling to break above the 21 EMA zone, which is the 21 EMA high and low. That's a key zone, and price is not able to push through it as yet. However, when we look at the HMA, it's up. If you look at the ECS MACD, it's thick blue. So that's indicating that the momentum is to the upside, and I think that at this point, when looking at the double bottom here, price is going to make a bigger bullish move. It's just taking its time. It's not easy to break through a thick resistance level like this, but if it does, I would expect them price to make an upside like this towards at least the long-term moving average, and if not further, depending on exactly the momentum we see at the first breakout. So for the moment, it is possible the price might make a dip down, but I think that will be a pullback as price then basically bounces off the double bottom and reverses back to the upside. All right, so I'll be looking for bullish engulfing twins, any bullish candlestick patterns in this zone for confirmation of that, and I would like to trade that up to at least around the 116 zone. 115 could be an in-between target as well if you want to grab some profit earlier. All right, so 115, 116 are the targets, I think, the main targets, but it could go beyond that because as we discussed in previous videos already, this is looking like a 5-wave pattern. This is looking like an ABC, but this could expand with another ABC and one more ABC, and this entire piece could become a big bullish correction. So, and this could even be a 5-wave pattern. So I think that considering the double bottom and the fact that this could be an expanded bullish correction, there is more space to the upside than to the downside at this moment. Unless price breaks below the double bottom, of course, if it breaks below 113 with a daily candle close near the low and below 113, that would certainly change perspectives. In that case, something like this, that is a signal of more downside, and you know, we could expect price to challenge 110, roughly speaking. That's the next round level. If it does break above the 21 EMA, the confirmation of a breakout to the upside would be a daily candle close above the 21 EMA, and in that case, there's a good chance that price will get up to the targets I mentioned, 115, 116, but maybe even up to 119, 120 if we get that bigger expanded push up. All right. Now, if we get the daily breakout, we might get a little bit of a retracement of the 21 EMA zone as the 21 EMA angle shifts from bearish to bullish. Price might retest those EMAs first, but probably what I expect, of course, is a bounce in this zone and a continuation higher. All right. In the meantime, though, we don't have that daily breakout yet. The price is at a decision zone right now. The 21 EMA on the 4-hour chart is up, but you know, price is pretty choppy in this particular part. So I think that there is a chance that price might break below the 21 EMA, but you already know my thoughts about that. I think it's going to be a bounce roughly at the 61.8 fib, 50 fib, 78.6 fib. All of these fibs around 113.30 to 113.75-ish are support areas. So this bearish breakout I don't think is interesting because it could fall just a few pips and then bounce already. This area right here I don't think is interesting either that much on the 1-hour chart, although it's technically at a support trend line, could bounce because of that. I think it's still probably a little bit too likely that it could make a deeper retracement, so I'm not interested in this zone myself. But if it were to break above, let's see, probably this head and shoulders level right here, right? That's a potential left shoulder, and let me get rid of this fib. There we go. That's a potential left shoulder right there, and that is a potential head, and this could be a right shoulder. So that's still a dangerous area, but if it breaks above with a good 4-hour candle, breaks above that zone like this, and you get a break above the R1, a break above the 21 EMA, a break above the head and shoulders level, I'll look for a pullback into the 21 EMA on this 1-hour chart. Look for a bounce and continuation, and I think that could still be a good way of trading the upside if we don't get the bigger retracement to the downside. All right, moving on to the pound dollar, you can see this channel to the upside here that is typical for wave 5. We already indicated that this strong momentum is probably a wave 3. So if you like wave patterns, it's probably this, and you can understand that it's a wave 3 because of the shear, because of the momentum and the power in that push up. Now this is typical for wave 5. It did break the previous high, but it's choppy, slow, corrective, but in a channel nonetheless, and staying above the 21 EMA. And it looks like, I think there's a good chance that wave 5 could be completed. Maybe that this is still a wave 4 and we get one more wave 5. So one way of knowing that could be to put a fib on the potential wave 3 in the wave 5. If this is a wave 5, we could have a wave 1, 2, 3, 4, 5 in that bigger wave 5. All right, so from this perspective, a break below this zone, 38.50 fib, around 130.70, 130.90, would indicate more downside, right? Whereas a bounce in this zone and a break of the potential bull flag that we have here could still indicate one more push higher within the wave 5, a 5, and that target could be around 132.30. That's where I would expect a bounce, then back to the downside. So either price moves up, hits the wave 5 target, moves down again, or it fails, breaks below the 50 fib, makes a bear flag, and it continues lower like this. All right. Now, if it does this break to the downside, I would move this fib from the very top to the very bottom like this. And in that case, I would be expecting price to fall towards these fib levels primarily, which in turn could be a bouncing spot. I would expect an ABC, so something like this, maybe a break to the 38, a bounce back up, and then a move down again towards the weekly pivot point, which I think will be a bouncing spot again like this. Bounce, hook back, and continue. So this is the path of least resistance. I think is very doable and very likely if we get to break below that 50 fib for the pound dollar. Alternatively, if it breaks above this bull flag, then there could be, you know, a move up to 130, 132, 132.30, which in turn would be a resistance and bearish reversal spot for downside. What does all of this mean? In my view, you can see on the daily chart that price has reached the long-term moving average. So we're looking, in my view, at a ABC, and just like the euro dollar, I think this could be wave A, down for B, and up for one more wave C. It could be a complex correction, basically, with some double zigzags here, or triple zigzags, or many zigzags in any case. So that, I think, is the most likely scenario, that price could go up to, you know, these resistance levels right here after a pullback up, and then that could be the end of that correction, and we could start perhaps at that point the downtrend. All right, more free and extra analysis you can find out at EliteCurrency.com. We have our ECS live service with extra analysis, wave analysis, but also our own trade setups that Bennett and I trade. We indicate what we trade, where, what stop loss, what take profit, what entry, etc., what system. We use various subsystems, CAMACD, SWAT, and also systems within the SWAT. Ultra, by the way, 3 systems, CAMACD, SWAT, and Ultra, and subsystems within them. So yeah, I hope that you check it out. I think it could be worth your time. Take a look at ECS Live at EliteCurrency.com. Wish you all great trading. Cheers.